My guest today has set to solve the massive cash management problem of treasuries for hundreds of thousands of companies around the world. And in doing so, I feel like we might have found one of the killer use cases of crypto rails. As we talk about tokenization, we'll investigate all that with Tanner Tadeo from StableC. Welcome, Tanner.
Thanks for having me, George.
Can we start by setting up a bit the background? I see StableC talks about treasury. Can you explain the problem that you're trying to solve?
Yeah, so very simply put, StableC is a cash management solution. We use blockchain rails, but ultimately the problems that we solve is we help companies access capital markets products that they historically did not have access to. So we offer money markets, we offer fixed income products, and we offer some additional securities out through the platform. And why it's different from some of the other products that exist on the market today is we give access to tokenized money market funds and tokenized fixed income products. And the value add there is that you can trade those funds 24/7, 365, and then settlement is near instant, so plus or minus 10 minutes. So you don't have to wait 2 days to get liquidity out of some sort of security. You don't also have any lockup periods associated with those investments, and there's also no minimums. There's a $1 minimum, so I think most of our customers can cover the $1 minimum to get into these securities. So the use of blockchain technology essentially just creates a more efficient way of accessing capital markets products so you can put idle capital to work.
And just to be very explicit, what is the alternative? Because you say they have access to those products or they didn't have access to some of the products. They have access to some products, but can you walk us through, the basic of what do they have normally access to in the traditional world and what are the challenges, obviously?
Yeah, it's a great question. We like to think about it from a market segmentation perspective. So, if you and I ran Coca-Cola or some big Fortune 500 company, you typically will use a large transaction bank to manage your free cash flow, right? So if we had $1 billion in free cash flow, we would put it with one of the top tier banks. They would create us custom portfolios and they'd make sure our idle capital was always put to work. In futures, forwards, derivatives, hedging strategies, bonds, gold, equities, fixed income, money markets, you name it, whatever is in line with the investment policy of the corporation, that transaction bank is putting that capital to work in a white-gloved solution way. Now, conversely, if you and I were in the mid-market and we ran a steel manufacturing company and we made $60 million in revenue, we pretty much have a checking account in QuickBooks, and that's about it. And so from a market segmentation perspective, the top performing companies in the world have access to all the white glove capital market solutions to make sure that their money is always making money. Whereas the middle market and the lower middle market, they typically they've been gated from accessing these products because they don't have essentially the privilege of working with some of the large transaction banks because you need large reserve requirements to work with them. And so
it's a scale thing, right? You cannot offer the same services if you don't have, you mentioned $1 billion, but something like that, yeah.
Exactly. So, when you think about how these products work today, they typically work in the traditional asset management world and the traditional capital market world. They work for the Fortune 500 companies and the big transaction banks and investment banks out there provision these services out in a white glove way. So that's how they work in the traditional markets, but we serve mid-market companies, lower mid-market companies. And so those companies today, especially in the United States, a lot of them actually don't even have a high yield business savings account, which is wildly counterintuitive. And if they do, it typically generates 2.7% or maybe 3% APY. On platform today, our APY ranges between 3.5% all the way up to 4.66% APY. And so what we're doing is essentially going after the mid-market that has never had access to these types of products before. And so it is not only a step change or a step function change for them to say, now I finally have access to money markets and fixed income products that fit within the investment policy set forth by my board or by my auditors, but also I can access these products in a very efficient way, where if I have idle capital sitting in my checking account on a Friday, I can sweep it in, make yield on Saturday, Sunday, get back to US dollar for the open of business on Monday and continue to operate. I like to think about blockchain and some of the stablecoin and RWA products that are coming on chain as more of an efficiency gain. You're still investing in the underlying securities, and those securities are provisioned by the asset managers that we all know. And so everything is quite secure and robust. It's just you're getting a more efficiency. There's like a step change in the efficiency of capital management these days. And so now with that technology, you can provision access out to mid-market, lower mid-market companies with a cost efficiency ratio that makes it have like good unit economics of scale to go out and serve segments of the market that historically haven't been granted access to these products.
Yeah, and we want to really get into that. But one more question, just to make very, very clear what this mid-market is. And mid-market is a huge market, right? It's $1 million or $100 million companies potentially. But from what I understand from their perspective, what they have access to is pretty much access. It's very similar to what an ordinary person would have access to. So I have cash, I would buy a money market fund. Mm-hmm. It would settle in 2 days. And yes, just have fun, etc., which I don't particularly stress about. But if we're set to optimize this very much, and also maybe have the cash accessible all the time, I can see that it's at the very least under optimized and not that efficient. And we've known this forever, except we haven't thought about it because there was no alternative. And before we get into exactly what those assets are, I feel like there's something particularly surprising in what you said. You said there are still companies, there are painting companies like you have. And those guys, maybe they are into crypto, but I would assume that it's not their natural tendency.
Yeah, there's a lot to unpackage there. All good questions. I mean, when we go into these conversations, especially because we serve like the heartland of America, right? So we do work with people on the coasts, but a lot of the businesses that we have are in the middle part of the United States. And when we go into those conversations, we lead with the value proposition, and we really, it's more conversational of like, do you have a high yield business savings account today? Yes or no? If yes, what's the APY? If no, okay, would you like to put some capital to work in a very safe way? So we start with that, and then there's an education process, because like we don't actually, like in our sales pitches and in these conversations, we don't lead with like, hey, this is stablecoin, this is tokenized, hey, this is all these things, because actually that's the least relevant point in the whole conversation.
Can you explain to us RWA?
Yeah, so tokenized RWAs are real-world assets. So you can take things like a money market fund or like a real estate, like a REIT, or a fixed income product, and you can tokenize it and you can put it on chain. So they're digital representations of underlying real-world assets. So the industry calls it RWAs. But so, I mean, the first point is that we don't even sell like stablecoin in our narrative or messaging. It's really around, do you want access to high yielding securities? And is that a money market fund or a fixed income product? Secondly, as we start to educate, we then disclose like, hey, you send us USD, we convert that to a stablecoin, USDC. We then move that stablecoin on chain when you decide to buy a money market or a fixed income product, and we'll sweep that into an asset manager that we use. That's the educational piece. The second point to unpack is crypto is like a broad catch-all phrase. So like you've got tokens on chain that are like crypto tokens, right? And you can like Dogecoin and whatever else is out there, all these meme coins that get traded around. Like that's kind of like wild west crypto. It's mostly like self-custodial wallets. There's like DeFi, unregulated. Like there's just a bunch of noise in that space. Stablecoins are a little bit different. Stablecoins are a type of my personal opinion is I wouldn't even define like tokenized money markets and fixed income and stablecoins as crypto. There's cryptography, which goes into the issuance of the token on chain and like the smart contract protocols that help you move those assets on chain around. But it's not crypto in like the 2018 sense of this is some random coin that has exceptional volatility. So I like to think about stablecoins and RWAs as separate from the use of the word crypto, because it really is a technological paradigm shift in the way in which how money is moved and access to capital markets products are provisioned. Like to the same extent that when the credit card came out in like the 60s and 70s, it was a new technological way to efficiently move money between consumers and merchants and then instill trust between the banks. So, if Tanner swipes his card at the Starbucks, Visa can help authenticate and move funds between my bank account and Starbucks' bank account. So there's complexity in virtue of like how the technology works, but at the end of the day, it's just a more efficient way to help share value between two counterparties. And that's kind of what stablecoin and RWAs are. So yes, it kind of falls into this umbrella of crypto, but in reality, it's kind of separate from the historical way in which people think about crypto in virtue of like crazy volatility and random coins that fluctuate, etc.
And it's kind of contaminated the narrative, but it did. I think I remember from a long time ago, someone saying like, crypto will start working when we stop talking about it. Yeah. Because I mean, it's a fascinating story, right? The Bitcoin, PDF, etc. But it's not what everybody wants to know or have in mind when we just want to park our cash. Just to understand a bit more this link between, I don't know if rails are is the right term, but between this tokenization and RWAs. How do I, hold money market funds when it's not through my normal whatever process, which is also very complex?
There's a few things in this space, especially when you deal with treasurers, finance teams, CFOs. Rightly so, they're some of the most conservative people out there because like the number one golden rule in the corporate treasury handbook is do not lose the company's money. And so, a lot of the finance teams, they don't buy on innovation, they buy to de-risk something. So you have to really lead with a narrative of security and trust and compliance and all those things. So like how our product works ultimately is, companies to get on chain, we do it's in stablecoin land, it's called on-off ramp. So someone needs to send us US dollar and then we convert that US dollar into a stable coin. So USDC is the coin that we use. And we then park that in a custodial wallet, and that's a kind of an important tidbit that it's not self-custodial, it's custodial wallet. That our wallets are insured up to $250, which is materially more than FDIC insurance. So that gives treasurers comfort to know that, hey, if I do want to participate in this on-chain economy, at least I know if I go to StableC, my funds will be insured up to 250 million, and that guards against a whole bunch of things on-chain. So that's the first line of like funds flow is a user will wire or ACH us money into StableC, and then we convert that into a stable coin. We hold that stable coin in a wallet that is insured up to $250 million. From there, when a user onboards to StableC, we essentially provision access to registered broker-dealer infrastructure. So like with regards to WisdomTree or any of the other asset managers that we work with, we essentially create accounts at all those asset managers. When you open an account at StableC, it does the on-ramp to help get your cash on-chain. And then once it's on-chain and you decide to buy a money market fund or a fixed income product, we actually are the orchestrator that moves funds from a custodial wallet insured up to $250 million to the asset manager's account proper. If it goes defunct or something happens, your money never sits with us, it sits with the asset managers in question. And so that's how we provision access to these products out, because we sit on top of various asset managers and then offer their products or distribute their products out through our platform. And then ultimately the end user is engaging directly with the asset manager through the medium of StableC.
All right. And all those things are not something that we talk about or we hear a lot about these days, but as someone who was working in finance post-2008, that's all we were talking about. So you offer a platform. How does it combine or replace some of their more traditional tools?
StableC is an application layer, so the finance teams log into it. It looks very much like a normal bank account or something that you'd see at any kind of financial institution that you use. Our platform has role-based account controls, so the teams can permission access to different users. So like CFO could have like admin rights, and then the treasurer has like money movement rights up into a certain threshold, and like an analyst or accountant just has viewer rights, etc. And so that's how most of the companies use us today. They use us alongside their other financial tools. So our tagline at StableC is keep your bank, upgrade your capital. So we want to be very clear that, like, especially with mid-market companies, like the relationship you have with your bank, keep that. We don't want to disrupt that because you've built up 20, 30, 40, 50 years of trust with that institution. They run your payroll, they issue you lines of credit. Don't disrupt that at all. It's just a lot of those banks don't have the capability or capacity to offer some of these capital markets products out through their banking platform. And that's where we come in. So like that's why we are a cash management solution that finance teams can use alongside their banking partners. And so you can think of us mostly as like a money market portal or a capital markets portal.
And going back to what you said earlier, which, the difference of access that large companies would have, etc., does it mean it's kind of bridging that gap for mid-market companies?
Yeah, it is bridging that gap. I mean, we're really, from a mission perspective and a philosophy perspective, we are driven every day by ensuring that we can take Wall Street grade financial products and services and provision them out to Main Street. Because for far too long, good, solid businesses that have solid fundamentals, great cash flow, good operating teams that are the backbone of like the U.S. economy or just economies around the world, they typically are not running as efficiently as they could be. And so our whole kind of mission at StableC is to bridge that gap and allow Wall Street grade products to be finally accessed by mid-market, lower mid-market companies that historically haven't had access to these products that could help them run at a little bit greater efficiency with their capital.
I'll go back to that, but first, and probably that's going to clarify a lot of things, I would like to discuss a bit more of this Wisdom Tree deal that is on your website. Can you walk us through, the mechanics of how it works?
We're a big fan of the Wisdom Tree team. They're one of the more innovative and forward-thinking asset managers in the space, and they've got a great team behind them, so we're big fans of Wisdom Tree. And, the partnership really is just that, like we provision access to their registered broker-dealer infrastructure so businesses can engage directly with some of the Wisdom Tree securities that they issue. So that's the nature of the partnership, is really helping, businesses access money market funds and a few of their fixed income products that we're going to announce here in the next month or so.
So it's an existing money market fund that now settles through distant rail. Is that the key idea?
Yeah, that's correct. Yeah. So all the securities are, they're Wisdom Trees, and then we help our businesses essentially get whitelisted accounts at Wisdom Tree, and then Wisdom Tree is the asset manager, the registered broker dealer that's actually managing those funds and the underlying securities.
Right. It's not a different product or anything like that. That's why we call it a money market fund. It is a money market fund, but it has a different ticker from what I understand. That's what I was a little bit confused about.
Yeah, it is a money market fund, full stop. It's just some of the mechanics, because you're on chain, you have more efficient settlement times using through the use of stablecoin and on-chain tokens. And so that's why the tokenized version of a money market fund is a bit more efficient, because you're helping to facilitate quicker settlement times into and out of those fund products.
Yeah, and I can totally see how for money market this is essential, because the number is settled T+2, then it's money that's supposed to be yielding or more optimized as much as possible. So you want to have as little cash as possible, and therefore the ideal thing is to have something that's yield and that you can still almost pay with instantly. How do you see, the potential extension of the range?
It's all along the risk curve, ultimately. And how StableC thinks about product issuance is really around what the market wants, right? So the first line of product that we have offered, which is a tokenized money market fund, really came because, our clients wanted access to something that generated quality PY. And that was a safe investment option for them, where liquidity was high and the underlying security was, highly rated. And so on the risk curve, that's going to be essentially government securities and money market funds are going to be kind of lowest on the risk curve. And then if you want to go a little bit higher up, you've got bank deposits and CDs. And that's a little bit higher on the risk curve, still super low risk, but the lockup period is high with CDs. You have to lock it up for 6 weeks, 8 weeks, etc. And then, what we've heard is that folks are now wanting to go up the risk curve a little bit more and start to participate with short duration investment grade corporates. And short duration floating rate funds. So that's kind of some fixed income products that can get you a little bit higher yield. So as our client base and the market is starting to learn about the new ways in which you can manage idle cash, what we see is like money markets are the best way to dip your toe in the water and get comfortable with it. And then if you like what you see and you see the efficiencies because it comes out in the data month over month in virtue of how much more money you're saving, then we start to see an increased appetite for folks moving out on the risk curve and wanting to experiment with some fixed income products. And so as you think about product adoption in time, like we always follow what the market wants. So if the market wants higher risk products, we'll move into that. But you also have to take in consideration that most of the investment policies of like mid-market or like larger companies, they restrict operating cash to like government agency securities, money market funds, commercial paper, CDs, short duration of that. So the investment policy set forth by the board or the auditing committee essentially kind of dictates how much liquidity you need to have on hand and what you can do with that liquidity when it's just sitting in a checking account. So those parameters in like the real economy typically lend credence to a money market fund or a fixed income product. With with companies that have cash that needs to sit around for a little bit longer and they've got the luxury of time, we do see increased demand for higher risk products, but we approach that with a great deal of caution. We want to make sure everything that we offer out through the platform is institutional grade, safe, secure, etc. So we follow market demand and then we make sure that we work with the right partners to bring those products to market.
Yeah, and you have a very specific vertical treasury solution. It's not about investing in general, and therefore I can see how the platform and the functionalities and stuff like that you mentioned, like the security features, are just as important, and it's something that yes, people need to adjust to. But I'm also just curious if we broaden this, because you could say, okay, this is very efficient for money market funds, but it's very efficient for everything, right? Then I'm just going to quote a friend, James Finn from Mobius, which services a large pension funds, in the UK in particular, who mentions that tokenization and the use of distributed ledger technology are likely to become some of the most significant developments in the global investment market. They promise to reshape how traditional assets are issued, held, and trading. Do you see this as a serious possibility?
Yes, I mean, we definitely do. There's a few different data points that you can look at, right? Like if you're trying to be objective about it, and obviously we're biased at StableC because we build in the on-chain world, but if you just take like our sentiment and feeling and intuition out of it, if you look at the data, you've got some large publicly traded companies out there that already have Bitcoin on their balance sheet as a long-term investment opportunity. You also are starting to see some pension funds and insurance funds come into the market and start to buy on-chain tokenized money market funds. And then just look at the players in the traditional asset management space that are throwing significant pools of capital to tokenize some of their products, right? You've got Apollo, you've got Blackstone, you've got Fidelity, you got Franklin Templeton, you got JP Morgan, you got Wisdom Tree. A lot of these companies, if they didn't believe that if they didn't believe that capital markets and money movement were moving on-chain, they wouldn't be investing significant resources to tokenize some of their products, because those companies are incumbents in the space, right? They're not the startups that are trying to build some net new products. These are large incumbents that have been around, storied institutions with great brands. They're spending a significant amount of money to bring these products on-chain because they also see the efficiencies in the new technology. So I think you can just look to the market to give you a sense of like where the puck is going to, that you need to skate to. And as those products come on-chain, those clientele, like their clientele, will naturally drift on-chain as well. And then that percolates over into the real economy, it percolates down into the mid-market, percolates down into the S&B space, etc. And so, for us, what you have to believe is like in the next 5-10 years are more treasuries, corporates, and payment companies. Are you going to move more money and access more capital markets products on-chain or off-chain? And I think if you take a longer term perspective on it and like kind of weed out the noise that you hear on LinkedIn or Twitter every day, if you look 10 years out, the trend lines are pretty clear that more money, more corporates, more treasurers, more companies are going to be participating in the on-chain economy than not.
But if I may, there's one thing that you mentioned in those data points, which I think is kind of a very different data point. The fact that people have Bitcoin in their balance sheet. The characteristic of the asset is that it has a volatility of, I don't know, 50%, right? And therefore, it's a very different perspective in terms of, those are believers, right? Whereas where I see it from your perspective is that it's the non-believers or people who are not interested, I think more precisely, who are the core adopter because they're just really careful about managing their treasury. You mentioned it at the beginning. The narrative doesn't have to talk so much about stablecoin and crypto, etc. But what do you see as the main barrier to adoption in your pitch to those mid-market, mid-America, relatively large companies?
Yeah, the main barrier is honestly education, because the value props are clear, right? So if you kind of going back to one of the points we touched on at the beginning of the conversation, like if you strip away all the technology jargon underneath the hood and you just go to the value props, it's a no-brainer. Like, why would you not want access to a money market fund that trades 24/7, 365, where settlement is near instant? Like, all these things resonate, right? So the value prop is not the issue. That's like very clear. What does give folks pause is like, I don't know how it works. And I don't know what a stable coin is. And the tokenized, what is the difference between a tokenized money market fund and a traditional money market fund? And what is the risk associated with that? And so everyone starts to get hung up on the actual underlying technology. So, the biggest thing that we do is we spend a lot of time educating. We offer pilots, it's free to sign up to StableC. We spend customer service is the number one thing that we prioritize. So anytime a fund, a financier or a treasurer or CFO wants to chat, we're always walking them through, how does the product work? What's the underlying technology? Where the risk lies if they want to discuss risk and how we hedge against that with some of our insurance products. So it really is an education. And so we focus on going to market directly we do direct to business sales, but also we help educate the market through trusted partnerships, right? Through a lot of private equity firms, a lot of associations, a lot of consulting firms that have deep trusted relationships with these businesses. You kind of have to go to market through a trusted medium, because if you try and just show up and say, here, we're some Silicon Valley company trying to sell you some stablecoin, on-chain Web3 technology, they're going to look at you with 5 eyes and be like, what are you doing in X country or X city in the US trying to sell me something from Silicon Valley? You really need to be thoughtful about how you approach it, and then you also need to be educational and bring people along in the journey.
Right. So the obvious benefits do not offset the very natural request for those people to understand the technology. And you mentioned education, which seems to be very one-on-one, once you have conversations, etc. Education. Do you also think content? I mean, obviously you participate in podcasts, but how are you thinking about that?
Yeah, I mean, we like to do as much content as we can and help get the word out there. So content's important, but I think when you're building on the periphery of a new technological paradigm shift that will, over time, it's not going to happen overnight, but in the next 5, 10, 15, 20 years, the entire global financial system will get an upgrade. And the vast majority of financial infrastructure around the world, not just in the U.S., in a large way, the U.S. is materially behind the rest of the world in virtue of its financial infrastructure. Most businesses and governments in Latin America and Asia Pacific and some in Africa are already running on stablecoin rails and blockchain rails, and they've been doing so for the last 5-10 years. So, in time, the global financial system is going to slowly, almost like Thucydides' ship, just be replaced by some of this blockchain and stablecoin infrastructure. And so we like to lead with content, but more importantly than content, it's actually sitting down with and convening with people, showing them how the product works, and then just having that conversation.
Tanner, thanks very much. That's been an enlightening conversation. As one last thing, how do you see this evolving? You already told us about fundamental shift that's happening in the way financial markets work, right? But for StableC, more specifically for treasuries, what's your outlook for the coming years?
What we see in the market is that there's continued tailwinds behind not only StableC, but the general stablecoin market. I think you're seeing, more acquisitions happening in the space. Last year, this year, probably increasing amounts of M&A opportunity next year as well, as the large incumbents look to capture talent and technology and bring that into their platforms for distribution. But one thing, if you look at the macro signals, you've got some of the biggest companies in the world out there that are acquiring to build on-chain financial technology into their own tech stack. You've also got some of the biggest banks in the world. You've got JP Morgan Chase, you've got Standard Chartered, you got Citibank. They're all offering tokenized products. Even JP Morgan has their own blockchain rail called Connexus. And there's a ton of tailwinds that are lending credence to this space. So I think that it's going to be around the next generation of startups to come and build new infrastructure on the margins to help some of the on-chain technology continue to mature. And then, you're going to see application layers continue to pop up and build distribution. And so StableC, we sit at the application layer. We also own a bunch of the infrastructure underneath, but we continue to play at the application layer because we believe that businesses in the real world need a access point to be able to participate in the on-chain economy. So the future is bright, and I'm pretty excited to see what the coming years bring, not only in virtue of stablecoin adoption, but also capital market adoption and how folks start to imbue trust and increase that trust in on-chain financial technology.
Yeah, that's really a fascinating perspective, because for me, my immediate thought is, from this relatively small application, which is also an obvious one when you have this T+2 settlement, when it's actually cash that you always want to put to work. Oh, okay, that's potentially the entry point. And then, if it works, you could open it to a lot more. And secondly, what I can envisage, and we haven't had the chance to talk about this, if when you have an application, what other things can you do and what can you facilitate? Something that I'll be following very eagerly, looking at StableC for these developments. So thank you so much, Tanner, for your time today.
Of course. Thanks for having me. Enjoyed the conversation.
And as always, we'll add all the links if you want to follow Tanner, if you want to find out more about StableC in the description of the podcast. Thank you.